All right, guys, bringing you breakdown of Euro's price action from today. Not just Euro, but a few of the other pairs also. Uh, there's some pretty nice things that happened in price today. Um, but what we'll look at first is just looking at the Euro, right? The way that I'm seeing this is this would be our dealing range, okay? And of course, we have a buy side sweep and a sell side sweep. And this move here was to do nothing but find an internal range premium array to reach for, right? So if we come here to here, there is our price reaching inside of this premium portion of this overall range, right? Okay, so now the PD array that we met, which was last week, was this true order block here. Okay, we've completely rebalanced this range. All right, so moving back to basically day one of everybody's time here in the mentorship, right? We take out external, we push back inside for internal. So what I'm anticipating, from a long-term perspective and throughout this week, is that the euro will want to work its way to this previous week's low, right? Now, of course, last week's low is down here, but of course, every old low, or we refer to it as a previous week's low, right? Or respective to its time frame, okay? And you can see how there's little to no volume on this retracement up. Price is just, the algorithm is just seeking to rebalance this whole liquidity void that we'll see later on the lower time frame. Okay, but if we look back at a weekly time frame and also even a monthly, right? Price is continuously taking out previous month's low. Okay, now we've already taken out this month's low, and the intra month low, which is here, is actually a equal low. So if we push over here, what we see is this old low here is relatively equal with the intra-month low, right? And this intra-month low just means the low that is that has formed, but the month we're not yet done with this entire month, right? But from here to here, this entire range has been balanced, right? We go external, price pushes inside to rebalance the range, okay? So we have a short-term high, intermediate term high, and then since we're expecting that the overall draw on liquidity will be here for this week, right? Because look, previous week's low swept, we traded inside the range. Remember what I said, when we get bars that trade inside the previous bar's range, price is more prone to sweep both sides. So the previous week's low swept. And then, we swept this week's high, right? But look how price closes back inside of that range, okay? So this is kind of a telltale sign that we're wanting to reprice lower. We're already in a bearish market, okay? Now, think about this. If we're expecting or anticipating that price will run previous week's low, which is an equal low, okay? And if we look at this whole range here, and we ask ourselves what PD array is left within this range, right? That is in respects to the narrative that is already created, right? We're balanced here, and all of this is balanced. The only PD array left, right, would be this old low, okay? So I would expect price to reprice to that old low because we've already come to a breaker, right? On the premium side, we've priced to this breaker here, okay? And also this order block, we filled in this imbalance, okay? So we'd anticipate that price will reprice lower to take out this low. Okay, so now that we have that anticipation in mind, right, or that narrative behind price in mind, what we have to do is think in terms of, how this market profile will look, right? If you were the market maker, how would you build that narrative? Okay, so if price is opening here to begin the week, right? Then from there, we have to think in terms of power of three. All right, this is how we frame our days, right? This is why I was more so prone to buying today, right? Understanding that, typically Tuesday creates the high of the week, right? Either Tuesday or Wednesday. That happens about 70 to 80% of the time. So coming into Monday, I'm expecting price to trade above the weekly opening price. Okay. So the weekly open is here, and of course we use true day open, which is probably down here somewhere also. But we want to anticipate that the better buying will be under, right, the opening price, because price will want to push above, right? So here's the accumulation, manipulation, and then we expect price to the weekly range to expand down here, right? So in starting each week, right, we have to come into the week, and we initially want to kind of build a narrative or build some type of anticipation for what will that weekly bar look like, right? This bar here, right? By the end of this week, where will it have? Where is it more prone to have reached to, right? And I would say down below, these lows here, right? Because we're in a bearish market. This range, every PD array that price could possibly push to in this range has been met, other than this rejection block and this old high. But I don't think those guys will be traded to, and because we have more of a, more of something to kind of pull price to down below, right? Which is these equal lows. All right. So opening price here, we'd expect price to trade above that opening price. So the ideal scenario would be we open here, price gives us that accumulation, manipulation, we take out the low, and then we close here. So open, high, low, and then close. All right. So now pushing to this 15-minute chart to look at our entries from today and while we were buying. Okay. So this is the weekly opening, the price of the weekly opening candle, but the true day opening price is actually right here. Right. Now, in looking at last week, let me just push this up. Right, we had equal lows. Okay, price was in deep consolidation, and this is that price delivery cycle where we have, you can even start here: consolidation, expansion, reversal, retracement, reversal. Right. So this is why I go through that price delivery cycle, because you guys can see how we would literally be able to take apart in every phase, right? And understanding where we are in that price delivery cycle from a fractal standpoint, then we'd understand that if this is that consolidation, expansion, reversal, and this is the retracement phase, well, what comes after that retracement phase? The second reversal. Okay, so this is my thinking process today. Was I'm thinking that, okay, if this is my dealing range, or if this is the price delivery cycle, and we're in that retracement phase, pushing back to the discounted portion of this overall range here, right? This is discounts. Then I'm thinking, what PD array is within this range that price could push to, all right? So just outlining our PD arrays, we have this breaker, right? See this whole area right here. This is our breaker, right? So ultimately, this is what price is responding to today. This breaker right here, all right? And this is the breaker because we take liquidity, and then boom, all right? So basically price pushes down here, and this is just an optimal trade entry. If we take here, and that is probably 79%, right? So we push down into that 79% range. We rarely get a body closure up under that. But anyways, this is our breaker, all right? Here is our FEG here, okay? And you can see how the discounted portion of that FEG, right, is actually reused. See that? Right, so here's how we have to learn to cut through candles and price, and this is one of the easiest ways to kind of, I guess, clear out the assumption that what we're doing has to do with supply and demand, right? Because in supply and demand, you don't cut through candles like that. Okay, but then what we see down here, this is a fairy swing, right? So this is typical. This is textbook. So basically, when we have this here, and then price sweeps liquidity, and then we get a fairy swing, okay, we'd anticipate that price will come to either the neckline portion or, to some degree, back to discounts, and then we reprice higher, okay? So you have a sweep of these lows, of two previous days lows, right? and then we get a failure swing, and then it's very important to notice what comes after the failure swing: displacement. Okay, so what that says is that the elephant in the room is more concerned with sending price higher, uh, as of now. Okay, so once we trade lower into the discounted portion of this range, right, and notice this move here is nothing but a sell side liquidity pool. It's engineered, right? Price pushes down here, right? And if you don't trust the breaker right away, you could take a risk entry and say, hey, I'm going to trade from 50% of the breaker on this particular trade. Okay, and you would take entries here, stop would go there, right? Because this is a order block, and then we trade back into it. So these two candles are propulsion blocks, which honestly, that's what price, if you want to be more precise, price responds to this area here, this propulsion block, right? But you don't just use that by itself. It has to go into a complete narrative, right? All of this is a complete narrative. The price delivery cycle, the fact we had equal lows, the fact that we're beginning a new week. We have a 4-hour FVG, which is literally right here, which I'll show you. We have a sweep of liquidity, failure swing, and then so on and so forth, right? So once price trades into this breaker, right, I'm literally just looking for a reason to buy. Okay, so of course you guys know at this point I like to do a lot of things with these what I term reclaim fair value gaps. And what I see here is, we come here inside the breaker, we have a failure swing and then displacement, right? This here is just a fractal of this, okay? The only difference is that you don't see the sell side sweep here, but I see it right here. Because if I go to a lower time frame, then this is up, down, up, right? So that's going to be a low with sell side liquidity below it. So what I'm pointing at is the bottom of that candle, right? All right, so once we sweep that, we literally get a failure swing again, okay? And price is trading back into this candle right here, which this would be a breaker or a mitigation block. Depends on how you're looking at it on certain time frames, right? And then I'll talk to you guys all the time about series of down close candles, right? So let's see if I see it on the 15 minute, but I want to see if we can spot it on the 10, which I don't. But here's that 15 minute, okay? Here is that series of down close candles. I'll change the color, right? Bingo. We sweep this liquidity pool here, which we're inside of a breaker. We're under the true day opening price, way under the true day opening price, okay? We displace higher, okay? We take out this buy side liquidity pool here, tapping into this fair value gap, which causes the reprice lower, okay? So look how corrective this move is, lower. And then all price is doing is trading into this order block, okay? And you can see this as an order block, or you can see this as price trading into the fair value gap inside the order block. But ultimately, this is a true ICT order block because we have the fair value gap inside. And then price is responding to this old fair value gap and also this 50% mark of the breaker, okay? So my buys come from here, and then I'm targeting this low resistant liquidity pool here, okay? But ultimately, what I'm targeting is this 4-hour FVG, 4-hour fair value gap, and then this is an old volume imbalance, okay? Now if we measure this entire range, all right, so possibly we see price reach above to here, but what I was looking for for this week was to see price trade here first, and then we get a repricing lower to take out these equal lows, okay? So we may go deeper into this range, okay? I'll outline this because this is the neckline of the fair swing, right? So we could see price trade to that to some degree, and then also I want to outline this fair value gap, right? Because we saw how sensitive price can be to these. Once this PD array has traded through, it should act as some type of support and resistance. And then this whole down move here, this area here should act as a breaker to some degree. But we'll see how that how that works out. All right, but what I'm anticipating tomorrow is to see, maybe price does push in deeper into this range. Okay. Um, maybe it does, maybe it doesn't. But what I'm anticipating is that either Tuesday or Wednesday will set the high of the week, and then ultimately I'm targeting. Right, I'm basically trying to find reason for price to get down to this point here. Okay. All right, so that is the euro. There might have been, yeah. So right here, this here is an opportunity to get in and go long. This fair value gap. Right, so we've already got 2 market structural shifts. Honestly, you can count this as a market structural shift also. And then, what time do these entries happen? 9:30, right? Equities market open. Bingo. Perfect. Beautiful. So that happens right at 9:30, right? When that equities market volatility kicks in. Let's see. Maybe you could have found an entry on a lower time frame. All right, not quite. Okay, but here's that 10-minute FEG, right? Price trades into the FEG. Okay, and look what happens. Almost fills it in range in completely, but you have a short-term low here, intermediate term low here, and then we get the next short-term low that forms right here. Okay, and then boom. All right, so I was targeting here and then ultimately there, right? Which those targets have been met. Yeah, and then you can see how this fractal forms: short-term, intermediate, and then it's short-term. Okay. And up here it would be short term, and then we'll see what happens to this. Okay. Pound USD. I didn't really focus on the pound too much this week. So if we look at a weekly chart, which previous week's low has not been run, but you can see the draw on liquidity has consistently been previous week's low, right? Every now and then we get corrections, right, to fill in some portion of the range, and then price goes back into the order, the natural order flow, right? Which each week you can see each bar, right? Price is more prone to take out the low of that bar. Okay, so as of now, we have not yet taken previous week's low, but what we have done on the pound is we've completely filled in this range here. Okay, right? And I would anticipate that this candle is respected, right? Up close candles should be respected in downtrending markets, especially from a higher time frame perspective. All right. I want to say GU is responding to. Actually, let's mark out this low. I'm honestly not sure what's to the far left. But we've taken out, this is a yearly low from 2020, right? Okay, but what I am seeing is this here. Okay, we've completely filled in a range. So now I'm going to anticipate that we get a fair value gap to form. Not a fair value gap, but a fair swing. Okay, we've taken out these short-term highs. We've pushed here. So, ideally what I'd like to see, and this is just anticipation, right? Of course, I could be wrong. Price could, come here and we could expand higher. But what I'm looking for is, if we come here and then we displace lower, then I'll look for optimal trade entry here. And then I'm targeting previous week's low, right? Not a lot on pound USD today to really, do any coaching from, other than we had this true order block form right here. So here's that series of down close candles. I'm not sure I would have taken this trade though. And then price trades into this fair value gap. Okay. Possibly after we get this market structural shift right here, you might have been ready to take entries from this FEG here. you see this 10-minute FVG market structure shift right there. So you could have bought here, but like I said, I'm not gonna stress that trade because I don't per se know myself if I would have taken that trade, especially with equal lows right here, right? But what I do like about this is that since we have these equal lows, right, I'm pretty sure those were engineered for very obvious reasons, right? So that gives us reason to see price trade lower, okay? I don't necessarily see any reason for price to go above here because everything is balanced, right? The only area that needed to be rebalanced was this daily fair value gap, which price is pushed into this up close candle. I'm not saying that's an order block. What I'm getting at is, well, it is an order block. A series of up close candles, right? Within the range of this series of candles, there is a very small fair value gap here, and then also a very small fair value gap there, right? Which price actually trades right here, right to it. Okay. So I would like to see this low broken. Okay. Now, it would be nice to see this, both of these guys broken, honestly. Because here's a true order block, and then so this is like a propulsion block type of area, and you can see how price is responding to this area. So one thing I do know is that if price breaks this and we get a fair value gap, in here, if it displaces beyond this, then I would be shorting, from this area. Okay. The first indication would be not necessarily this low, but I want to see this low broken. Okay. Yeah, because if we break this low, right, this would be a sell side liquidity pool, okay? And if we're going to reprice higher, then price should be able to use this sell side liquidity pool. But if we break this low, okay, and we also break this low, then, to me, that those are two market structural shifts after we've taken out short-term highs and we've tapped into this true order block, right? The range of these up to close candles, we have the fair value gap here. So I would consider this, I would consider that enough to say, okay, price is order flow has shifted. We're changing hands. Yeah, and then you can see how true day opening is used as support today. Maybe this would have tipped the hat off to say we're going to continue higher, but you see this happens right at 11:30. But not a lot for me on pound USD today. Right now, gold was actually beautiful, right? So I actually bought here, okay, to target this high. Now we have equal highs, so it would be very nice to see gold trade up under this low, maybe into this area here, right? If we can be in here, London, or which I'm only trading New York, but if we leave these highs here, that will give us a beautiful narrative to trade up into these highs because this area is actually a daily fair value gap. Yeah, cool, perfect. And you can see this trend line liquidity. So here's a daily FVG, right? You can see price being sensitive to this old monthly low here. And then we actually have equal lows. Or do we? No, we don't. All right, so we have this low here, and then I want to say this area here is a 4-hour FVG, maybe. Yeah. Yeah. So this is just showing what price has responded to, right? Because here's an order block, 2 down closed candles. We have a fair value gap inside. And if we scroll back left, then you'll see why price repriced higher. Okay, cool. Bingo. See that? It just tapped into that FPG. Okay. So now understanding that narrative, right? You see how we always have a higher time frame reason, okay? Narrative. All right. So if we look here, you have basically a bullish dealing range that forms, right? This area here would be our consolidation, expansion, lower, reversal, You can see this as a reversal, retracement, reversal, or you can see it as a reversal, retracement, and then reversal, right? So this is just us understanding which phase of the market we are in, okay? So now I'm going to take you inside of this area here, and we're going to make it all make sense, right? But ultimately, here's a true OB, right? So all price is doing is pushing into this true order block. That's it, right? And then this area here also, what I like about this area, so here's a sweep of liquidity, and then there's a fairy swing, okay? It's just fractal, right? Because within this fairy swing, you also have, a breaker, right? Price pushes up, down, right? So this whole area, these two bullish candles are breakers, okay? Because we would have saw this, you know, once price traded through, we would have saw this as an order block because it had a fair value gap. But now that price pushes through, this becomes the breaker, all right? So let me move this out of the way. Let's look at our FEG. Okay, so this is the old FEG right here, all right? And now we're going to push into this area. So you see, once again, consolidation, expansion, reversal, retracement, reversal, or consolidation, expansion, reversal, retracement, reversal, all right? Push into the 10-minute time frame, 15-minute time frame, okay? All right, now you'll see the fractal. So here's that consolidation here, all right? We have a sell side sweep, right? Then price goes into the reversal, we retrace, and now we go back into reversal, okay? So that was the whole premises behind this, right? Once again, higher time frame, narrative here, bingo, okay? Once we push into here, here's a true order block that forms, look. Down close candles, once we trade through the high of that candle, right? All price is doing is coming right here, and this happens at 6 a.m. last Friday, inside of here. Okay, and then they actually sweep this low, and then in New York, 9:30, look what time this happens. 9:30, we're sweeping, we're tapping into this FEG, okay? 50% of this FEG. Right, bingo, okay? 50% of this FEG, right? We form another true order block, which price trades into today, okay? Looking at a 10-minute time frame, 5-minute time frame, right? So look at here. All right, this is our breaker, okay? Because if we were to see this, we would see this as that true order block, right? But once price trades far beyond this, and let's actually cut through here to see if we find any type of confluence within this fair value gap, right? So you can literally see price. Now, of course, we have this FEG too, but I like to, see that we can cut through and we can find confluence, okay? So price literally trades down into this true OB. So we have a true OB, a breaker, and then we have a reclaimed fair value gap, okay? Now, once we get that, we have consolidation, expansion lower, right? Reversal, retracement, reversal, okay? And you can see here's a series of down close candles, right? Within the range of those down close candles, what do we have? Fair value gap, boom, okay? So here's the FEG, and you can see, right, we trade down, up, market structural shift, and then down back to where this FEG was originally, okay? So we're literally buying this area here. You're buying this area here on the retrace. This is optimal trade entry happening. So right here, right, get down below the discounted portion. And this happens right at 9:30 equities market open, right? And then this happens right at 10 a.m. All right, so now I'll be honest, I didn't see this as clear today just from moving around, dealing with family, and being distracted. but you should see how everything that is mentioned in these breakdowns, it's always the same thing, right? It's literally always the same thing, right? Nothing changes. Now, price delivers slightly different, but in terms of what we're looking for, it's always the same exact thing, okay? Now, I did engage with price in this area here, right? 130. So any afternoon, which I don't necessarily trade the afternoon, but what you'll notice is that um, price will give you, somewhat of an optimal entry at that 130 time frame, 1 or 130 if you so happen to trade the afternoon portion of price. Okay, so now what I'm seeing here, and the reason that I take these entries is this area here, right? I was seeing this as my breaker. Okay, so this was the breaker, all right, because price traded through this area, which was once respected as an order block, right? So it traded down, respected it, and then boom. So now we trade right through it, and we have a fair value gap. Okay, so now if I measure this FEG, we're probably going to see price push right to 50% of that FEG, right? And then where does 50% align? Right at true day open, right? So this is algorithmic. Okay, so we push right into this FEG, and then now we can go in the lower time frame, okay, and watch this fractal form, right? So what we get is a short-term low, okay? Price pushes up, right? So short-term low created within that lunch hour, New York lunch hour, right? And then after the lunch hour, as we move into the PM session, right? And of course, this lingo is used more for indices, but I've saw it happen on gold and forex pairs every now and then. But it's the same narrative that we saw play out on NAS 100 today, which we're gonna look at in a second. But short-term low, right? Intermediate term low, okay, and then this other short-term low forms, and then we have a market structural shift here, and then we have another one here, right? And then look what led to that market structural shift: fair value gap. Bingo, right? So entries come from the fair value gap right here. So you can literally trade this, or you can say, nah, I want to wait until true order block forms, right? Well, here's your true order block, two candles, right? As soon as price trades through the high of that candle, right? All you want to do is trade the fair value gap. So here's the fair value gap between here and here, okay? Price trades down into the FEG. So you can literally buy here and then place stops up under these down close candles right here, right? But then again, there's another true order block that forms right here also. Two candles, right? Once price trades through the high of that candle, and all we're looking to do is trade the fair value gap. So here's the fair value gap in here. Price trades into it. That is an optimal trade entry from this high to here. Discounted prices. Boom, boom, and here's another optimal trade entry here, right? And then you see, and the reason that I'm taking this trade, guys, is because I knew that price will be magnetized to this higher time frame FEG, right? And we have not reached that point yet. Now, had that not existed, and if this were like a high resistant liquidity signature here, meaning that if we had up, down, and up higher and then down, then I might not have taken that trade, okay? But we don't have that. We have an open float liquidity pool that has not yet been met. So I was pretty confident in buying here because I had multiple confluences. I had a breaker. 50% of the breaker was 50% of the fair value gap was aligned with the true day open price. So yeah, we had a few things that aligned. So I hope that makes sense for you guys. All right, so moving from gold to oil, there really wasn't much on oil. I didn't engage with oil today. You can see this is not our market, right? This is just bullshit. So I'm not gonna even do too much talking with this. But what I do think we'll get with oil is, I want to see price push into this FEG. Okay. So taking out this short-term high, okay, low resistance signature. Low resistant, right? And you can see that, that's done on purpose. and then this area here would be a breaker. So this whole thing is the breaker, right? So we have a breaker, right? We have a fair value gap that rests inside the range of that breaker. And then also, if you don't see that as, even with this being a breaker, we also have this here, which is that series of up-close candles, okay? And then there's a fair value gap that rests inside, okay? And basically, price from today, or if that was last week, you can see that it was just trading back up into this order block. So this down move literally came from that because we were trading to that order block, okay? But what I like to see at this point is, because what I'm saying is, if this is my range, right, there's a buy side sweep, sell side sweep, and then all the price did was engineer internal range liquidity, right? And I spoke to Vinny about this today, right, on the session, was whenever you see price create a high or create a swing point within a range, but not to at least equilibrium of the range, and then it trades out, we're going to see that high, in this case a high, right? It could be a low, but we're going to see that as a short-term high, right? And then I'm going to look to see what PD array could price trade to above that short-term high, okay? So, and this is just my anticipation. So every night I have anticipations about price, right, or assumptions. But in waking up for New York session, I respond accordingly to price, because price could very well run this and then give me a fair value gap here, and then I end up buying, right? But I'm going to bed expecting that I'll have a shorting opportunity from here tomorrow, and we run out this low, okay? Because I'm expecting price to run previous week's low. Why am I anticipating that? Because we've literally been running out previous week's low, right? We have a little bit of a pullback here, maybe to rebalance this range, and then we go back into previous week's low, right? We trade inside the range here, but then guess what? Previous week's low. Okay, we trade higher just to grab buy side liquidity, right? But guess what? Previous week's low is swept. Last week we traded inside the range. Okay, now typically if we trade inside the range, then of course, and my theory is that price will clear out both sides of the board. But from a daily perspective, we took this daily high and then we're trading lower. Okay, and then we've completely traded all the way through this FVG. All right. So I'm kind of, here's that. This is my draw on liquidity here. All right. And then this black line is basically representing this daily order block, which we could possibly see price trade to there. But basically, I'm coming to tomorrow, seeing how price responds to this PD array here. All right. And then I'm understanding that this whole thing is a 4-hour FVG, right? Okay, so that is that. That is oil. Let's move to NAS 100. This was beautiful today, all right? Sorry about the colors. Colors are from last week, or not last week, but Sunday. I was showing you guys a few things, but all right, so I'm anticipating that, and honestly NAS kind of looks like pound USD to me, but basically I'm anticipating, right, look what we have. Every week price has been taking out previous week's low. Every now and then we get a correction, and this correction is only to rebalance this range, right? Once the range is balanced completely, we've taken out a short-term high here, so we anticipate, right, a fairy swing, which is this bar here. Previous week's lows are taken out. We reprice higher only to grab buy side liquidity, and then previous week's lows are taken out. Right? One up close candle within this whole range. Okay. Then we go previous week's lows taken out. Okay. We might have met a monthly PD array. All right. So what I do know is that these are monthly equal lows. Right. I'm pretty sure price will trade down here. All right. But what I'm anticipating is once we get here, once we take out this PD array, right? Because this would be we took out this high, so dealing range high, dealing range low. We push to the premium side of the range. Okay, see that, and we see these highs here, right? We were literally calling these targets for this whole thing for about 3 months now. But we push here and then we push lower. We go back to taking out previous week's lows, and then we have this little move here sets up last week, which tapped into this FVG, which I want to say is maybe 50% of the FVG. So if we take it from this candle, we'll see it go 50%, right? This is just a volume imbalance right here, okay? But anyways, we take out previous week's high, and then we trade lower, right? To the previous week's low, okay? So now I'm still anticipating that we'll keep taking out previous week's low, right? And then also if we look here is the low resistance signature, right? So I think that price will run right through these areas right here, okay? Moving to the daily. Honestly, we could have simplified price from last week. I was all worked up, but when I looked at the charts this weekend, I'm like, oh shit. NAS 100 tapped into this FEG. S&P did not. SMT divergence, right? Which actually goes into what I'm going to get at next. Is I'm kind of anticipating that price will respect this here, okay? We could push to this portion of the range because, this would be price given a swing point. This would be kind of a short-term high, so I'm not opposed to seeing price trade beyond that, but I'm more short biased on the indices right now, okay? But anyways, the buys from today, all right? 15 minutes. All right, so if I'm expecting or anticipating price to run out previous week's low, then I want to see price trade above Monday's midnight opening price first, okay, to start the week out. All right. Now, coming into the day, there really was not much to play off of, but what you see is right at midnight, price trades lower. All right. So that's the first indication. Okay, trades lower, and then it runs into this sell side liquidity pool here. Right. We take out that liquidity pool. We have a market structural shift. Right. And then what I see is that price is respecting these down close candles. Respect there. Respect here. Okay. And then obviously today we respect it there also. Right. Order flow. Boom. So I actually rode through both sessions with this trade today. Once I saw, here's your series of down close candles, right? All price does is trade to the high of that candle, okay? Now on the 15-minute chart, once I saw price push here, so 9:30 opening price was here, we expand higher, and I'm understanding that we have this big gap here, and I'm just anticipating that price could possibly trade above this. This is a lot of low resistant liquidity right here, okay? But once I see us expand higher, right, I take trades from this fair value gap here, right here, okay? So I take trades from that fair value gap. And then here's something to note, right? We've literally saw this happen in the past 2 weeks where we have this type of range, and then as we push into that lunch hour, right, around lunch hour, we'll see price come and take out that AM session low, right? This is that low created at 10 a.m. And once we take out this buy side liquidity, we should see price reprice to sell side internal range. Okay, we took out external, then we reprice to internal, right? We're finding that internal PD array. So once we study this range, we say, what is the most probable PD array for price to reprice to inside of that range, okay? And then if we cut through candles, you'll see that this two up close candles with a slight fair value gap inside at some point would have been saw as a true ICTOV, right? And you see price trade back inside of here, right? Which the true order block exists inside of this area also, okay? So buying happens here and then here, right? And ultimately, you got a lot of you guys ask me, how do I base my targets? It's literally this simple, okay? you take that swing point and then you figure out what liquidity pool aligns with that Fibonacci extension, right? And of course, you have to make the entire narrative make sense, but 27 aligns with that liquidity pool, okay? And then possibly, we possibly come here. Let's put -2. I want to see if it aligns with this FEG. And then let's also put -1.5. Alright, not quite. But 1.5 does align with this high, so we could see that happen, right? But ultimately, my overall TP today was I was only targeting this area here, okay? Because it's pretty decent risk reward on this low. And then we target here, right? So it's about 1 to 1, 2, 3, 4, maybe 1 to, I think it was about a 1 to 4. But yeah, that was the trade I did for NAS 100 today. S&P was similar, I believe. Yeah, same thing. We take out this low right at noon, right at the New York lunch hour, and then we reprice higher. Okay. Yeah, I am definitely seeing that. I don't see why price wouldn't want to target this area. If it doesn't, it doesn't, right? But what I do know is that this is a daily FVG, right? So if we think where are my premium arrays, right? That daily FVG is what stands out. Daily FVG, right? So I want to see price push to here, and then possibly inside of this old fair value gap. Maybe inside of there. So we'll see and see if price will get there. Sorry about all the lines. Kind of like this because here's that true order block. Okay. So 3990. Okay. So we'll see if price will get here above these equal highs. So here's an example where we have a PD array resting, right? Where this range here rests below the true OB. So it would be ideal to see price trade into that area. Right, so I can see this is Monday, maybe Tuesday we trade into here, and then Wednesday reverse. It's just my anticipation, right? But what I'm keeping in mind is that I want to see price trade down to this area. So previous month's lows is what price has been attacking, and then we have this little corrective move here, right? So last month all we did was trade up to grab buy side liquidity. So I am anticipating that we would be coming down to take out all of this down here, right? Let's take out all of this.
Take the Lowe's Pro Brand Challenge and discover flooring products from Stainmaster and Moped.
Relatively equal here and here, right? Low resistance signature here, and then you can see downtrending market. We have I don't expect this to be broken at all. If we measure this candle's bodies, okay. All right, so that's all I have, guys. Yeah, that's all. All right, so I hope you guys learned something from this. Please let me know if there's anything that anybody has any misconceptions about, and we'll make sure we clean them up. All right, have a great day trading tomorrow.